Hello. Hope you guys are doing well and hope you can see me okay. Let me see if I do this. Take some of the stuff off. We'll just give a second for people to join, and I'm just going to clean up my chart real fast just to make sure it's completely clean and I don't have anything on there. Give me just a second. And we'll just give a second for people to join. I think that's kind of good. You know what? I think we're going to use MNQ's chart, or maybe I'll use NQU. Yeah, that's actually kind of clean. I just want to make sure I don't have anything on here that could be confusing. And we'll just give a couple more seconds for others to join us. Okay. I think that's good. All right, let me just check real quick. All right, it does look like we got a couple people. Hey, make sure you guys hit the thumbs up button and let's go ahead and get into it. So let me move my chart. Similar to last week, the camera's here, but I'm going to be turned this way so we can kind of walk through our charting for the week. I don't think this is going to take too long because it honestly is pretty similar to last week and what we did there. You know, bias is still very similar and the approach is going to be pretty similar to what I'm looking for this upcoming week. I think it's pretty simple what we're going to be watching for in terms of invalidation levels for buy side and for sell side ideas. I do have things that I think I'm anticipating, but I don't want to get ahead of myself. So I'm just going to kind of play with what they confirm and what they validate. And that'll be how I roll with the move. So in terms of the chart, let's start on the monthly. I think that's probably a really, really good place to start. On the monthly, oh gosh, I hate when I do this. So you see how that line is like there where you can see. Let me actually delete that. Or you know what? No, we'll keep that on there, but we're just going to make that be visible on the current interval below. And same thing here, real quick. Oops. Okay. I don't know why that annoys me so much, but let's start on the monthly. And I just kind of want you guys to see monthly what we talked about before. We've got some really, really juicy sell side targets. We basically have a monthly bullish fair value gap, and then there's another monthly bullish fair value gap here. This fair value gap is considered to be a balanced price range, meaning price created a sell side move and it moved to the downside where you had unequal representation of buyers and sellers where there were only sellers present. And then price then made a move to the upside, basically balancing and representing buyers and sellers equally within that price range. So once that move happened, technically the chart doesn't have to retrace to offer sell side to that level as it is considered to be balanced. And one of the things ICT always would talk about when he would explain his methodology is that price is seeking liquidity. So price seeks buy side or sell side liquidity. It seeks to balance fair value gaps and to basically reprice those fair value gaps to ensure that we have an equal representation of buyers and sellers in the marketplace. That's one of the first rules I learned, is that you need to have an equal representation of buyers and sellers for the marketplace to be considered like a place you can trust. So most people believe that is indeed how the market delivers price. They believe that it is based on buying and selling pressure, and that when people place orders like us, that is what moves the market. And I do believe that it's similar, but it is a little bit different in terms of how the algorithm delivers to that thought process. So with that in mind, this is a balanced price range. And I definitely would recommend, if you're not familiar with balanced price ranges, to study them, because they do communicate a lot when it comes to where price is likely to go and where price is likely not to go. So with that being said, this is a BPR. We also have this BISI here. And then what we're noticing is that we do now currently have monthly SMT at the highs between NQ and ES. So ultimately what that means is that NQ has reached a level that it is finding to be resistance, and it's communicating that there's the potential that they are diverging in their charts and how they're delivering price. And divergence between ES and NQ, as well as the Dow Jones, is one of the first signals of a potential retrace. However, just because you see SMT doesn't mean you're going to get a retrace immediately. So it's just something we kind of want to keep out for and watch for in the event that it is an early signal of what is to come. So that's our monthly time frame. We're going to go down to the weekly time frame. I think for me, the first thing I notice is that we do on the weekly currently have representation, or I guess I should say SMT on both sides. So you've got bearish SMT at the highs, which we just spoke about, and then you have bullish SMT at the lows. And that is, again, just something that we want to keep an eye on. Anytime you have SMT on both sides, ultimately you want to kind of chill because it's communicating you're in consolidation. So when you're in consolidation, there is no draw on liquidity, and you really want to be careful, and you want to wait for price to show its hand. And one of the ways price shows its hand is by creating fair value. Okay, so fair value communicates when smart money is present, as smart money is the only one who can create fair value, aka the algorithm shows its hand when it creates fair value. Not always, though. You do have to be careful because like that balanced price range that was created, they can't immediately reprice it and just swoop right over it. And I'll actually show you what happened Friday, which was a really great example of a manipulation move that they made in the market. But long story short, we have SMT on both sides, so you want to be super careful, especially since it's a high time frame SMT. For me, though, something I just kind of noticed, and I do watch this, and I used to read candles when I was trading with order blocks as more of a primary for me. Something I notice on these candles that I do find to be a little bit of a red flag is that this green candle failed to close above these two red candles. On my chart, obviously they're white, but these would be your bearish red candles that you would see on a traditional chart. That to me is communicating that NQ has a resistance up here, and there is some sort of an order block that is blocking NQ from making higher prices. So it's kind of reinforcing the ideas that I have had about NQ being the sister that we need to watch to see if the market has the ability to go higher. If anything I'm saying is making sense, make sure you guys hit the like button if you have not already. So with that being said, you have a couple of things going on here that I think we need to watch for next week to determine if price validates higher prices or not. So one PD array that I had showed you guys, I believe it might have been last week or the week before, is this particular fair value gap here. This fair value gap is a bearish fair value gap, so we'll just make it red. I'm not going to write the fair value gap, the word on there, but you guys know what that is. And then here we have a bullish fair value gap, so we'll make that green. And that basically is what I was marking last week as like the levels that I really wanted to keep an eye on. For me, if NQ was going to continue higher, I want to see NQ find support on that red box to then make higher prices and ultimately do something like this. However, what was interesting about the move they did here is this candle, this wick. I know some people just see it as a wick, but ICT calls those rejection blocks. Rejection blocks are potential, what's the word I want to use? It's kind of like a clue, like they're breadcrumbs that the market leaves behind. To many people, it just looks like a wick, but wicks have a different meaning depending on where they're located. And one of the things ICT teaches is the PD array matrix. And in his PD array matrix, when he talks about dealing ranges, he communicates that a rejection block is the top PD array. So basically when you have a dealing range, the rejection block is going to be at the top of that dealing range. It's at the top of the fractal. So if price is indeed bearish, the potential is that this rejection block could be the top of that potential bearish fractal. So we definitely want to keep an eye on this rejection block and see what price is going to do with it as we enter into next week. And since this rejection block is on the day chart, we're going to want to be watching it from a day chart perspective, okay? If price is able to get over that rejection block, then we would look at that to be used as support. And if price rejects it, we would look for that to be used as resistance. Yes, the day BISIs, those BISIs are both balanced. Because we are in consolidation, we're not looking at those BISIs from a balanced or repriced perspective. We're looking at them right now as they are being used to hold price in consolidation. So they ultimately are the range that price is currently being held within. Okay? So that's how I'm looking at those BISIs. I'm not looking at these BISIs on the day chart for anything with regards to price offering buy side or sell side, as that's been done several times here. They are ultimately at this point consolidating within those fair value gaps, which oftentimes does happen, especially when you get an aggressive move down like this. A lot of times when price trades back into that fair value gap, it'll get stuck and consolidate because, again, who makes the big fair value gaps? It's smart money. So if smart money makes a huge move in one direction, buying a whole bunch of sell positions, and then they trade back up into it buy side, they have to pair buy orders with their huge sell order position. So consolidation within that range is something that is not uncommon for that reason. We have to have equal representation of buyers and sellers, right? So to do that, they consolidate within that range. So just something to keep in mind when you're looking at price and you're kind of seeing what's happening, to understand the narrative behind why it potentially may be doing what it's doing. So with that being said, for me next week, I definitely want to be keeping an eye on this rejection block. I personally used to really, really like using rejection blocks, and I used to use them as almost like a primary PD array for a while. I loved them. They were just very, very effective for me, and they helped a lot with bias and whatnot. So I will be definitely looking at this rejection block tomorrow to see how price uses it. And I do think something that is kind of interesting about this rejection block, we're going to mark this to be used on the current interval and below. But what I do find to be kind of interesting about this rejection block is if we go to the 4-hour time frame, this rejection block does have a SIBI in it. And to me, that SIBI is going to be very important to communicating if this rejection block is going to reject price or not. So tomorrow, or I guess you'd say in a couple of hours, what I want to be looking at is I want to see if this 4-hour fair value gap is used as resistance. If price uses this 4-hour fair value gap as resistance, then I am going to be open for lower prices. I'm going to be open to the idea that we will potentially go lower. If price trades and uses that rejection block and this fair value gap as support, then I would be open to the idea of higher prices. Okay, so to me, it's kind of simple. This rejection block for me is an invalidation level. If it gets above the rejection block, I'm looking for higher prices. I would look to see that rejection block be used as support. If we reject this rejection block, we trade up into it, reject the gap, and start a sell side move, then I'm going to start to look for my bullish PD arrays to be used as resistance for price to go lower. And I would be looking for price to basically be trading all the way down. We would need to see this breaker that is held as support for the last, we've been using this breaker since August the 1st. So the whole month of August, just peep that. August 1st, they made a breaker that they have used the whole month of August. So all of August, we have been held in a consolidation range. Just think about the date and the timing, right? Because I don't believe anything in the algorithm is on accident. I believe every single candle that is created was created with intention and was intended to have a purpose that was already predefined. I don't believe that anything in the market is on accident and is just random. And that just comes from trading the same methodology over and over and over again and just seeing how, when something is printed, how price uses it and the way they basically define what they plan to do. So with that being said, this has been here since August the 1st.
And we use this particular breaker here on the 5th. We used it again on the 20th. They came back again on the 2nd of September, which is basically a month later. And now if we do come back, we want to watch this breaker again. If they break through that breaker, you want to look for that breaker to be used as resistance to go lower. If they come back to the breaker again, so if we start falling, you always want, like I've said on threads 1,000 times, keep track of your breakers. Know where your breakers are at. Because when price is falling and you see people a lot of times and people are like, where are we going? Where are we going? What's the target? Blah, blah, blah. What's the da-da-da? Mark your breakers. Mark your breakers, okay? The breakers give you really big clues as to where price is going. Okay, and you got to get comfortable with the breakers on different time frames because price is fractal. But I'm telling you, like, you want to definitely mark your breakers. Let me show you where the breaker is on this particular target. So let's go down. We need to go down in time frame. You can see it really good on the 1 hour, but let's go down even lower. So 30-minute isn't bad. I think 1 hour, honestly, is probably the cleanest in terms of the look. But to me, breakers have a look. They don't always present in the same exact look, but for the most part, most of the time they do. They look like this, okay? So if you can start to see what they look like, typically you can see them with the naked eye. But there's a methodology that breakers print in, and I'll put the video on the my thread so you can like watch the breaker video again. The video I think is like 20 minutes or it might be like 12 minutes. Watch that video till you get it. Okay, master that video, spend the time to make sure you truly understand breakers because every time price changes direction, it makes a breaker. And when price retraces, it comes back to the breaker. It's really simple. All right, and you're going to have, on the move down we made Friday, they made a bear breaker. And if we're going to go higher, we got to break the bear breaker to go higher. Like, it's very simple. Like, to me, it's just, it's very objective. It's easy to keep track of where you are and what's happening by just honestly knowing where your breakers are at. So mark your breakers, okay? But with that being said, this is the breaker. I'm using these two candles here, but I actually marked the high of this particular swing just because that swing high is there and price is fractal. So there's the potential that the breaker is actually inside of this swing here on a smaller time frame. So I typically will take the high of the swing that rejected the fair value gap. So you see this SIBI here? This is a bearish fair value gap. That SIBI is where price rejected to go lower to take liquidity, that final liquidity, and it actually hit a higher time frame breaker to then go higher. And this is a signature that you also will see a lot, and I'm not going to get into much about this, but if you can catch what I'm trying to say, like, this is the way that price moves when they're making that pivot to turn and to flip to the other side, whether it's bullish or bearish. So you have this bearish fair value gap. So you have a low, high, lower low, higher high. That becomes your entry, and then price trades higher. So if we just replay this a little bit further. I don't know why it's moving so slow. I got this thing going slow for some reason. There you go. Boom. So if you would have bought this breaker, this fair value gap, where this breaker's at, look at that move off of there. Y'all see that? And then boom, came back to the breaker and just left the building. Okay? So you guys basically, you've definitely, I would say, learned breakers, spend some time with them. They are fire. Okay, this thing is like, you see how the thing ain't even, sometimes trading view be getting on my nerves. I'm not gonna lie. Like, what is you doing? Okay, let me come back. So that is what I used as my breaker. All right. So that's a breaker. You guys, y'all got that? Everybody good? Yeah, there you go. Okay. So, let me move that over. So let's go back to where we are. We'll go back to the 4 hour. And, let's pull this over here and make this a little bit smaller. Okay. So for me, right now, I would probably make this, I'll leave that color there. So you've got this as your other breaker. So on the 4-hour time frame, this is the candle that I took for my breaker for the move that we made last week. So price made this move down here. And I'm actually going to delete that thing. But price made this move, this big move down, manipulated back down to the breaker that we were just taking a peek at. And then they made this big move up. So we manipulated down. And anytime, I'm not going to lie, like anytime price opens the week and immediately heads one direction, and they do it in a way that's aggressive and elicits an emotional response, it's probably manipulation. Okay, I'm going to say that again. Anytime we open the week on Sunday night and we head in one direction, and they're talking about it in a way that makes people elicit an emotional response, whether it be fear or greed, it's probably manipulation. Okay, y'all got that? That makes sense for everybody? So that's a cheat that you can kind of just in your mind start to be like, okay, let me not get caught in this little trap. So the fact that we opened the week and we traded down right after that holiday and we went straight down and hit that breaker and pivoted, and then we found our smart money reversal here for the upside. This is actually your first smart money reversal. There's another breaker down here as well. I'm using this as the breaker for the full move just because we're in consolidation, and for me to truly validate this, I wanted to see price get over this particular candle here. I was worried that we were going to come reach this level, and turtle soup is what ICT calls it. And turtle soup is basically like when you get a validated breaker and then price tries to clear that fair value gap to get over, and it just falls. Like it's just not able to get over. So long story short, I was watching this level, and that's why I had made that comment on Threads where I'm like, dang, this mug is fighting hard to clear this level. Like it just kept wick. Like if you go back on your 1 hour, they wick this level so many times. And when they do that, also think about the response that they're communicating to people who are watching that. They're thinking like, dang, that level is really tough. And that was what I was looking at. I'm like, this level is really tough. I got to see them break it. Because I'm not about to try to get up in here and it keeps wicking this level and it cannot get over. But once they cleared that level, let me actually show you guys real fast. When they cleared it, so you can see, and it was actually pretty dope when they did it. But this is ugly. Like this price action was nasty. But once they closed the body over and they found support here, and we didn't unfortunately have SMT that I saw. There might have been on smaller time frame, but you had this 30-minute SMT. It's kind of like a signature of like, okay, we're finding support here. Okay, it's safe to start framing your idea. You know, until you get this, I like to wait, so I'll just wait and sit there. And if it leaves without you, without SMT, that's okay. Like, just wait. You'll find another entry, but it's better to have a safe entry than any entry, okay? We're not trying to get clapped, because if you would have bought this would have basically elicited a lot of drawdown. But we had SMT here on this level, and then we got it on top of the breaker. So when price got back over the breaker, so this would have been a great opportunity for a place to consider an entry for the long move. And if we go down, let's just look at the 5-minute. I just want y'all to see this now. Okay, so you see this. We got a bearish fair value gap here. Let's go to the 1-minute. All right, so we got another breaker. So you see, we could take this candle, or I'd probably take this candle because this fair value gap we had on the 5-minute was there. So this would be your stop loss here that we talked about, that 30-minute SMT. This is really ugly though, like non-farm. That's why I don't like to play non-farm, because price is sloppy, it's saggy, it doesn't respect PD arrays. And ICT would always tell us, like, you don't want to really be trading when they're manipulating, because our logic is going to be less probable. Like if you're looking at this and you're going, oh, they just invalidated that array, you'd get clapped, because it's still bullish. Like they're still going.
it's just a little sloppy. So this is why Michael always tells us to be extra careful and honestly to skip non-farm payroll. And this was Thursday. So for me, I don't trade that non-farm payroll Thursday. That is a rule of mine. I just don't do it because of this. The fact that they are extra sloppy. The breaker formation that they typically create was really nasty here. And it just, it makes it kind of challenging to participate. This was also lunch, so that definitely adds to the dynamic. But as you can see, price was able to get over and to find support on that array. There was more SMT created, which you could leverage for your stop loss as well. And then boom, they offered a clean entry here. And we'll just let that play a little bit and continuing to print bullish PD arrays. But this is like, look how deep these retraces are. So you really had to have conviction. But she did what she needed to do. So I just wanted to show you guys that real quick, that anytime price changes direction, they always got to make a breaker. So that's why I always tell you guys, learn your breakers. It's a nice little cheat sheet you can use. It's a nice way to basically leverage those breadcrumbs to be able to see kind of what they're thinking. So let's go back to idea for the week, because I definitely, like I said to you guys, I don't want to keep you too long here today. It's Sunday, so we want to take advantage of our one last day before the work week. But back to my idea. So I'm using the day chart for my invalidation ideas. If price gets above the bearish rejection block and uses it as support, I'm looking for higher prices. If price rejects the rejection block and gets below this fair value gap again, then I'd be looking for price to come below this fair value gap, attack that liquidity down there, and you could just play it all the way down. You know what I mean? So I'm just watching this stuff because I want to see what they plan to do. But ultimately, that is how I leverage and, just kind of work through the PD arrays. Like, to me, it's pretty simple. It's just a way to like the true support and resistance. ICT gives us a lot of things, and when I first started trading, I was using support and resistance, how people would tell you to identify it, and supply and demand zones and all that stuff. But nothing to me has been as accurate in terms of precision as using this methodology here. So I hope that makes a little bit of sense to you guys, but it's pretty simple to me. We get above the rejection block and use as support. We go higher. We get below the PD arrays here that we're consolidating in, and we reject. We go lower. So that's kind of it. But long story short, remember what we've talked about before too on Threads, where if price is in consolidation, to leave consolidation, you have to do it with fair value. So you don't have to guess. And if you like to frame your ideas using a higher time frame, like day or higher or week or higher, just wait. We don't have anything on the day chart that really is going to give you a super strong conviction on direction one way or another, with the exception of the SMT as a breadcrumb. So it's not a bad idea to just wait. The move that's coming is going to be big. You can tell by the fact that we're consolidating on such a high time frame that they are preparing for a very big move. And I think we just got to be ready for when they make the move happen, and come up with your invalidation levels, come up with your what would we call that? We call it the, not just invalidation levels, but the scenarios. There we go. Come up with your scenarios, so that way you have ideas around potential ways that price can deliver one way or another. So I'm going to let you guys get back to it, but if you have any questions, just ask me on Threads or in the comment section. This particular chat, I don't think it stays up after the video goes live. So if you want to ask me questions for me to reply to, write them in the actual video, and I'll make sure to reply to you guys there. Or like I said, go to Threads and you can ask me, and I will be sure to get back to you. So I hope you guys got something out of this, and I will see you in the next video on the channel, or we can do this again next week if you guys like this format. All right, but have a great rest of your week, and I hope you guys are able to make some big money next week, because I'm looking forward to it, and I'm really hoping to make some big money myself. So I'll see you guys next time. Bye.